Hi, I'm Dennis from Freehold Express. Buying your first home's a bit scary. There's a lot of so-called experts and institutions out there providing self-serving information, all of which is designed as bait to attract borrowers to them. That makes it hard to know where to turn to get good advice that works for you. But don't worry, you've been here before and found your way through. Remember when you bought your first car? You were young, fearless, and ready to take on the world. You'd been indoctrinated into the world of driving by your parents, driving instructors, and others around you. You learned about different cars, how to drive them, and picked up tips about how to find a really good deal. With all your newfound knowledge and experience, you're ready to buy your first car, and with a little bit of help along the way, you probably did. You sorted out the finance, the insurance, and left with your very first car. Buying a home's no different. You rely on your own experience and the experience of other homeowners around you to help get you started. You don't need help finding the right house, getting the pre-approvals, or even getting the checks done on your home. You already know how to do that stuff. What you need help with is the stuff that you don't know. I'm here to give you 5 simple questions that you should ask your bank to help make sure that you don't get trapped in a 30-year mortgage that doesn't work for you. Because if you do, you'll pay for your home 2 to 3 times over in unnecessary interest costs. The first question you need to ask is, how much interest am I going to pay over the term of this mortgage? You need to understand the real cost of your mortgage. I save my average client $167,000 in interest, and the interest that we save is then used to repay the mortgage. And I've got to tell you, $167,000 goes a long way to pay off a mortgage. The next question you should ask is, what mortgage structure would allow me to pay off this mortgage in up to half the time without putting me under any financial pressure? Because how a mortgage is structured and how a mortgage is paid has a massive impact on the amount of interest you pay and consequently the term of the mortgage. I save my clients an average of 15.7 years off the term of their mortgage while they maintain their existing lifestyle. The next question you should ask is, what additional costs will I need to account for to meet all of your conditions? Be aware of how much building and engineers reports, the insurance, registered valuations, any remedial work, and especially the legal fees will cost you. Now try not to have these costs added to your mortgage because that'll cost you an awful lot over the term of a 20 or 30-year mortgage. Oh, and by the way, I can get 10% discounts on some of the most competitively priced conveyancing in New Zealand. Right, the fourth question you should ask is, what's your policy on matching other banks' offers? You shouldn't just accept the interest rate that you're offered. It's a competitive environment out there, and your lender should be made to compete for your business on a number of different levels. And you should also make sure what your lender can do to sweeten the deal. Lenders offer incentives to attract and secure your business, so make sure you know what to ask for. If you don't ask, you don't get. So if you're looking for 100% impartial advice and a proven program designed to help you become mortgage free and up to half the time while you maintain your existing lifestyle, then make sure you give us a call or get a free online mortgage analysis to see what you can achieve when your mortgage is structured and paid in your favour instead of your lenders. Hey, good luck with your mortgage, and thanks for taking time to watch this little video.